Gold prices moved little in Asia trade on Tuesday as investors awaited more cues on U.S. monetary policy and inflation. The yellow metal recently retained its $1,900 an ounce support level. However, Fed officials said that the bank would still need to raise rates in the near term to combat overheated inflation, and markets are widely pricing in at least a 25 basis point hike by the Fed later in July. And rising interest rates are not good for metal prices, given that they push up the opportunity cost of holding non-yielding assets. With Powell flagging at least 2 more rate hikes this year, pressure on metals markets will likely continue. So what do the charts show? And we're now looking at a 20-year monthly chart on the Spiders Gold Trust, and in the upper left you can see the symbol is GLD, and for disclosure purposes I do not hold any shares of GLD at this time. Now a couple of things pop out here. Number one, we're right at this point here, 179.45, and that coincides with the roughly 10-year anniversary of this drop here. So that was pretty significant actually from this point there, or even from that point there. We came on down pretty hard. It took a couple of years to get to this bottom, and then several more years before we headed on up. The other thing that I'm looking at is that this resembles somewhat a cup and handle formation. Let's start the cup up here. You move on down. Nice bottoming and basing. The longer the term you have, the better it is. We came on up, and then maybe you have a handle coming down like that, more or less. It's kind of ugly. So I don't really think it qualifies as a cup and handle, but there are some similarities. The other thing to look at is for the last several years, it's been running through this channel here, say between here and here, and it hasn't had much momentum either on the upside or the downside. And I think interest rates as well as inflation has kept it in check. So we may be heading on down here, and if we are, let's wait and see where it bottoms and bases, and perhaps we can pick a better buy point. But for now, I'd watch it from the sidelines. Let's look at the oscillators. Volume heading down somewhat slightly, not too negative though. Here in the MACD, we did have this bottom at that point there. We came off of that, reflected on up, but it wasn't real strong, and looks like it might actually truncate here. We'll have to wait and see a few more months or so, but again, this move does not look real strong. It is above zero, so there is some strength, but I think that the separation between the fast line and the slow line is declining, which is a little bit of weakness, and you can see that weakness here in the histogram with the rollover or initial rollover there. We'll see where this goes. I don't have much hope for a strong run from here. I think it's just going to meander within that channel. Here, price rate of change, we're near that zero level, so moderate, but not strong, and certainly not too weak though. But relative strength here only moderately above that 50 or midline at 57.14, so no real move being forecasted by that. And then into stochastics, it looks like we had a good pop off of that bottom, but we could be at the early stages of a rollover. I would watch out for that. And then into the Williams, pretty much the same thing. We had that top in that overbought territory, came on down. We have a fish hook here, but I don't think that has much promise to it, at least on the upside. Back to the price chart, one last look. I would say once again, I'd wait for some more downside just to see what's going to happen here with inflation and interest rates. So just remember, the risk is all yours. ChewDog out.